Hi, everyone. Welcome to the official Broadway Investing 101 webinar. My name is Dorie Clark, and I am here with my colleague and investing partner, Alisa Cohn. Hi, Alisa.
Hi, Dorie. Hi, everybody. I'm excited to be here.
Yes. So today we are going to be talking about essentially the basics of Broadway investing. Alisa and I started Broadway investing now getting close to 2 years ago, somewhere between 18 months and 2 years ago. And we have learned a lot along the way. And one of the things that we discovered in the process is that it's a confusing world. It is not necessarily easy or transparent to figure out how things work, and we had to kind of scrap around and from the ground up learn a lot of things. And so we wanted to present a webinar where we could essentially codify our learning and help share it with other people who might be either just curious about Broadway in general or thinking about becoming Broadway investors, because we hope that we can save you some time in learning some of the things that were hard fought for us. So over the course of the webinar today, Alisa and I are going to be walking you guys through some of our journey and sort of how we started doing this, what we've learned, and also sharing tips and points just so you can familiarize with yourself with the mechanics of literally how does it work? How do you figure out what to invest in? How do you even hear about a show? What are the mechanics? What is the process, etc. So that by the end, you either, as a Broadway aficionado, will just have hopefully a more holistic understanding for the process, which is kind of cool in and of itself. Or if you are thinking about becoming an investor, you can hopefully just wrap your arms around that process a lot more effectively and efficiently. Sound good, Alisa?
Awesome, Dorie. Kick us off.
Amazing. Great.
Yeah.
Well, I'm gonna kick us off by talking just a little bit about how we got started investing and what our story is with regard to this. For me, it actually started in really it started in early 2016 when I went to a Broadway show with my friend Bruce, and I saw Fun Home, which was great. That was the Tony winner the year before, and it just really hit me right, and I loved it. I thought it was amazing, and I decided that I wanted to learn to write Broadway musicals. And so I set myself an action plan that this was going to be something that I learned. And so I began pursuing that, working on it, training, starting eventually something that I am in now, which is I'm part of the BMI Lehman Engel Musical Theater Workshop, which is known as the premier training ground in America for musical theater writing. But as part of learning to write musical theater, it occurred to me that one of the things that would be pretty useful is to understand the business context around Broadway theater, especially since, I come out of a background in business and being an executive coach and a consultant. And so I thought, I really need to understand the mechanics a lot better. So I went to Alisa, who is both a dear friend and someone who is a theater lover. And I told her, and I was thinking about starting to invest in Broadway. And she said, "Oh, that's great, Dorie. Yeah, do it. And then I said, well, what I thought would be even better is if we did it together." And Alisa at first said, and then she said, "Actually, that's a very good idea." And so
All my best ideas that came from Dorie. Yes.
thank you. And so since then, we have been indispensable partners, and we have formed an LLC together where we, for the past 18 months, have been investing in Broadway shows. So I'm going to kick it over to Alisa to talk a little bit about where we are now. From that beginning of like, oh, this would be a cool idea.
Yeah.
Alisa, take it away. What's the current state of affairs?
So the state of affairs is that we have since then investigated multiple shows, and we've invested in 3 shows. The first show we actually invested in was Tootsie the Musical, which is on Broadway now. But through that process of investing in Tootsie the Musical, we met somebody, and you'll hear a lot about meeting somebody and the value of relationships, who then got us into Lifespan of a Fact, which turned out to be the first show on Broadway we were able to invest in and participate in. And that was the very end of last year into this year. And the end of the year before, into last year. And then we just recently invested in The Inheritance, which is a 2-part show, 2-part play, not a musical. And that's on Broadway right now as well. So I want to say that, but Dorie, I also want to talk about why, and I think we should go back and forth on this. Why the heck would we do this? So Dorie Clark, my good friend and smart person who always has good ideas, she says, we should invest in Broadway shows together. And I just want to say that I'm already an angel investor. And so I kind of understood the value of alternative assets and asset classes. And I really understood also that she was right in the sense that you really get behind something, you really can get under the covers of something once you start investing and looking at something not just as a work of art, but also as a business. And that was very exciting to me. And then, of course, there's the hope that we can make money on this. When you invest, you do want to get a return on your investment. But to be sort of engulfed in a new community was also very exciting. I definitely ascribe to the point of view of like thinking about how do you build your skills and build your network. And so I thought this whole process would help us both build different skills and build a new network. Do you want to say more about that, Dorie?
Yeah, that's great, Alisa. I will also say, I mean, one of the first things that people often say when you say, oh, you know, I've been investing in Broadway is, you know, people often have stereotypes and they say, oh, just so you can lose all your money, right? You know,
Light your money on fire. Yeah.
yeah, a bunch of wise guys. But actually, what is a much better analog, I think, when it comes to Broadway investing is, in fact, angel investing. Because essentially, you know, it is true that if you pick any random one Broadway show, that's, you know, it's not a good idea to put all your eggs in one basket. You do need to diversify, which is why when Alisa and I first started, we actually made a pact literally out of the gate that we were not going to invest in one Broadway show together. We were going to invest in a minimum of 4 over a 2-year period so we could test the waters, try it out, and create a small portfolio for ourselves. And if we liked it, we would continue to do more. What studies have shown is that for Broadway shows, about 25% make a profit. And so, you know, people will say, well, you know, that's kind of terrible. That's pretty low, right? But, you know, if you think about angel investing in startups, it's actually not dissimilar. What you hear in sort of the, you know, the venture capital or angel world is like, look, you know, out of 10, 3 are going to lose all their money. 3 are going to, you know, maybe net out, maybe, you know, a little bit of profit, or, you know, they lose some money, whatever. And then 3 of them are actually going to be quite successful. And, you know, the thing that everybody's looking for is the unicorn, right? Everybody wants to invest in the Uber or whatever. And in Broadway, everybody wants to invest in the Hamilton. Everyone wants to invest in Wicked. And so
yeah. Also, the
that's
Book of Mormon, Dear Evan Hansen. I mean, there are not just Hamilton. People think it's just Hamilton. It's not just Hamilton and Wicked. There are other ones that are outsized in those returns.
That's exactly right. So we are taking a long view in terms of crafting a portfolio, and some are going to be successful, some aren't, but it is a diversified new income stream. That's how we think about it.
Yeah. Yeah, and I guess I would say to what I think we're going to do today is we're going to talk about really our step-by-step process in thinking about both what we want to invest in and how we sort of make those decisions, and then how we began to get what we call deal flow. The idea is how do we meet the right people, build the right community to then be in the way of shows as they're coming up to be able to invest in them. So I think that's what we're going to talk about today. Dorie, do you want to just jump in and just talk about sort of the mechanics of who's allowed to invest in Broadway shows?
Yeah, absolutely. So when it comes to investing in Broadway shows, one of the things that is important to be aware of is that not everyone is allowed to invest in Broadway shows. Similar to, in fact, going back to venture capital, angel investing, etc. This is to protect you know, naive consumers or whatever. They want it to be reasonably sophisticated investors that if they were to lose all their money, it would not be a devastating blow, right? Pretty much for any alternative investment class, this is how that is handled. And so very similar to angel investing. So you have to be, in order to invest in Broadway, an accredited investor. And an accredited investor is a special category that is set up by the SEC. And basically, I'm actually scanning to get the exact, here we go. So an accredited investor is an individual who earns $200,000 per year in each of the 2 most recent years, or they have with a spouse joint income of $300,000 for those years, and or they have $1 million net worth excluding your home.
Mhm.
So, asterisk, if you are watching this later, it is possible that the numbers might change over time with inflation or whatever. But as of the time that we're having this, that's sort of the ballpark, right? You have to be someone who either earns a reasonably high salary or has $1 million in the bank, or both. So that's sort of a starting point to think about it.
Yeah. And then as a qualitative point on that, it is true that although we don't think we're setting our money on fire, you should indeed recognize this is a risky asset class, obviously, and it's a risky investment, and you could indeed lose all your money. And so if the show doesn't recoup. So you just want to understand the risk factor here, especially if you're investing in one single show.
Yeah, so Alisa, let's talk a little bit more about the process. Like how
Yeah.
do people find shows to invest in? If somebody is like, oh well, this is cool. I'd
I know.
like to find a show to invest in. How do they do it?
Yeah, exactly. So I think step one, just to say, like Dorie had this idea, we should invest in Broadway shows. And then she came to me, we should invest in Broadway shows. I really want to come back to this as a coach. Like, you have to first think of the idea. And so I would encourage everybody out there to think broadly about what's possible for you. But step one is like, I could actually do that. That's not for other people. That might be for me. And by the way, step one is to then investigate it. So what we did, and what I encourage everybody to do, is like sort of like digest, like, we're going to invest in Broadway shows. Where do we start? Let's talk to other people who have invested or who are producers. Now, you may think, I don't know anybody. Well, first of all, you know both of us, so you definitely know somebody. And what I found, and I think what Dorie found, is as soon as you start talking about it, it turns out that, like, I invest in Broadway shows, or somebody else, the person you're talking to, that they know invests in Broadway shows, or is a producer. I personally had already built up a bit of a theater network in New York. And so asking around is a starting point. Who are people who have invested in the shows or are producers or somehow connection to that world is a fantastic first step. So Dorie, the way Dorie and I do everything is really to think about how do we build our network as a starting point. And so it's really about who might be the right people just to talk to and take out to coffee and take out to lunch and have a conversation about what they're doing and about the process and about what they found. That to me is step one. Dorie, do you want to add anything about that as far as the network goes?
No, that's good. Keep going, Alisa.
Okay, so once you start thinking about, first of all, once you start gathering people to you who are part of the network, let's say they're producers or investors or just also showbiz people, you begin to just sit down with them and ask them, how did you get started? What we found is people got started in a variety of ways. Most of them had a theater background or interest in theater one way or the other. And so they can talk about their interest in theater, their background in theater, and they talk about the mechanics of how they actually started getting involved. One of the people that we invested with so far the most often, she had actually been approached as like, she's a good salesperson. And so somebody said, I want you to help me raise, actually she was a cabaret singer. And so she had that sort of in terms of her own kind of Broadway background and sort of musical or theater background. And somebody just said to her, I'd love you to start raising money for this show that I'm doing. And so she thought, I can't do that. She went to her husband. He said, I think you can do that. She said, all right, I'll just try. And that was sort of 25 years ago. And people all have a different story about how they start getting involved. So I think that to me, the step really is talking to like 3, 4, 5, 7 people about the mechanics of actually how they got involved and what you can, and also what you can learn from them in terms of what their process is. In addition, because you're interested in investing, you start telling them, we're interested in investing. Our checkbook is open. Amazingly and immediately, they want to show you and send you videos, budgets, pitch decks, all sorts of opportunities, because it's actually very helpful for them to have a new investor in the ecosystem. It turns out Broadway shows, especially musicals, are expensive to mount. And when you're a willing participant in the ecosystem, you do start, and you know a lot of people, you begin to meet a lot of people, you do start getting deal flow from there.
Yeah, that's very helpful, Alisa. And so just to sort of underscore some of the things that Alisa was saying, there is not, wouldn't it be nice, but there is not a sort of central registry of investment opportunities on Broadway. It's not like, oh, you can go to this website and find out about all the deals and say, I want to pick that one. It's not like setting up a TD Ameritrade account and
Right.
picking your stock. Basically, everything on Broadway is sold through networks. And so cultivating deal flow is extremely important. You need to know a lot of people, ideally, so that you can be presented with different opportunities to invest. If you do not have that contact, you will not be presented with that opportunity. So thinking about it in terms of networking and, as Alisa said, making it known that you would like to invest, that you're, looking for opportunities, people will be generally, glad to talk with you and to present you with possibilities. Alisa also mentioned that it was expensive to mount shows. Just by way of range, because this is helpful information, I think. A musical most typically these days costs about 15 million to mount. So, you could say maybe an average of 12 to 15 million, but it goes more and less. Hadestown cost $9 or $10 million. This is the musical that won the Tony last year, and so that is very much on the cheap side for a musical. There is a musical now which is selling very well. Really. Strong sales, expensive tickets, called Moulin Rouge. The problem with Moulin Rouge is it costs $30 million to mount. So it's going to take a long time for investors to make back their money. For plays, they are typically cheaper. A play is typically $3 or $4 million on Broadway, although they can be more expensive. One case in point is The Inheritance, which we invested in. That is a two-part play, and so therefore you're kind of mounting two different plays that cost over $9 million. So that's a pricey one. So I'll pass it back to you, Alisa.
So just to say, we really, we entered sort of the ecosystem basically focused on building relationships. And so once people understand that you're really serious about investing and you make some investments, it kind of also earns you the permission to continue to ask people to introduce you to other people who are wider in their sort of range of folks they know in Broadway and in investing circles. Also people who are maybe a little bit higher up in the food chain. Also, we kind of use that background and experience to find introductions and other kind of creative ways to meet other people who are more lead producers and other people who can help give us sort of deals and introduce us to properties which may not be necessarily out there for other people. So it's really thinking about building that network. I would then say separately, or maybe adjacent to that, we also went to school, right? So you don't just build a network, you also have to learn. So we were presented with budgets, and just to say that we walked through the budget with different shows with multiple people. This is not like, I would just say I won't say it's confusing, but I would say it's detail oriented to learn the new language of business, which is the business of Broadway. So like, what are these different line items? And why are the costumes in this show so much more expensive than the costumes in this show? Well, if you think about the Cher show, there's a lot of costumes in that show, and there's a lot of sort of repair and maintenance to those costumes. So just understanding the different budget figures, that's important to go through, which we did go through with multiple people. We also went to school. We went to the Commercial Theater Institute, CTI, their 3-day producer boot camp. And we sat through and listened to different producers talk about a lot of different aspects of the business, the aspects of investing, what makes a great show, what makes it, this is a question I always want to answer myself. How does a show which starts off not so great turn into a great show through development? How do you develop shows? How do you work with creatives? What about the legal issues involved with all this? And then certainly various different elements of the budget, as well as understanding what's the recoupment chart. So the recoupment has to do with how long, at what kind of percentage of fullness of the theater will it take for you to make back your money and then ultimately make money. So those are the kinds of things that we went through to really learn this process, and then also to really be more and more enmeshed in the community and get deal flow. Dorie, do you have more to add on that?
No, that's great. I'll just move on to the next section. And I see we have a great question from Lynn about investing in regional theater. So thank you. We will take that a little bit later on. But I will say, for anyone else who's on the webinar right now, please feel free to type your questions into the chat box. And we are glad. We want to take all the questions. So please feel free to type them in, and we will tackle them in turn. We just wanted to sort of lay out a few kind of high level principles first. And so one of the things to talk about is, what are the benefits of investing beyond the financial, right? So, again, to the point of like, why would anyone want to invest in Broadway? Obviously, in theory, one hopes that you will turn a profit. So the bottom line and an investment return is one goal, but there are some other benefits that come with investing. So a typical one, this is kind of like the fun, sexy one, is that in investing, almost always if you invest at a high enough level, but almost always in general, you will get opening night tickets. And that's just kind of fun. You get so for Broadway shows, not always, but the vast majority of the time, the minimum investment unit is $25,000. And so typically, if you invest $25,000, that will get you a pair of opening night tickets. So you see the show, and then you get to go to the after party. And the after parties are usually really quite star-studded affairs. So there's the cast, obviously, there's your other fellow investors and producers, and there are often just sort of general celebrities in the house who get invited. They're friends of the actors, or somehow in the mix, and so you get to go party with them. And you do generally get to talk to them. We went to the Lifespan of the Fact opening, and tragically, Daniel Radcliffe, who was starring in it, was protected by his bodyguards. So yeah, he was surrounded, so we were not able to talk to him. But we
had a great selfie with Bobby Cannavale.
Yes, the other stars, Cherry Jones and Bobby Cannavale, were certainly accessible, and we got to meet some cool folks at the party as well. In fact, that was one of the ways that we were able to connect with other producers, was our fellow investors was going to this opening night party. So that was cool. So that's one benefit. Another question that gets asked is, oh, well, if you invest, do you get to weigh in creatively? And the answer is no, they don't give a fuck.
Not even a little bit.
No, pretty much. Now, the distinction, right? Just sort of broad picture, how you think about producers. There is a lead producer, and that is the person. They have creative control. They are the boss, and they're sort of pulling together the whole enterprise. And so that person, has a lot to say. Underneath the lead producer, because it is pretty darn expensive to mount these things, and so therefore it's really hard for one person, even a really well-connected person, to bring in $15 million. So they have a legion of what are called co-producers, and the co-producers are essentially bundlers. And so each co-producer is responsible for bringing in typically a minimum of $250,000. Sometimes it's more, could be 500, could be $1 million, could be several million if they're big. If you are a co-producer and you are responsible for a fairly large stake, they may listen to you. But if you are a garden variety investor, unfortunately, no, there's not really creative control. But that is why it's important, of course, to make sure you're investing in something that that you believe in, that that you've either seen and liked, or you respect the creative team, etc., so that you have a high degree of confidence that yes, this is going to be a thing that you are proud to be involved in.
Yes, definitely. One other benefit to this whole process is that you can buy, not be given, but buy Tony Awards tickets. So that was really fun. That Dorie and I last year went to the Tony Awards together. And, we went I've been to the Tony Awards before as a spectator, but we went as a participant, because our show, Tootsie the Musical, was up for Best Musical, as well as a number of other awards, which it won too. And so that's also a very fun part of the process. And then also you get bragging rights, and you can buy house seats for your friends. And
Explain what a house seat is, Alisa.
I will. So house seats are kind of the best seats in the house, reserved for producers and others. They're actually, when they're not sold, they're sold as premium tickets, which means they're obviously a higher price. You can go directly to the box office through the producers that you're affiliated with, and you can buy these house seats at regular full price orchestra, with no service charge at all, and you get fantastic seats, and you haven't paid any extra for them. So, but again, people call them house seats, and people think they're free. They are not free. You do pay for them, but you get them through the box office directly, and you don't have to pay any service charges. And it's kind of fun. And again, I would say that I knew a lot of folks in the Broadway community, even like 5 years ago, and I would ask them for house seats. It was always this waiting game. But now Dorie and I both have access to, I would say almost any show on Broadway. We could figure out who can help us buy house seats, and it's very empowering and fun, and again, a benefit of being part of the community.
Yeah, one thing I just add on house seats, if a show is not very successful, like a house seat is not that exciting, because like if somebody can buy a discounted ticket for $30 or $50 at Today Ticks, then they don't really want a house seat because it's a full price ticket. But if you have a hot show, if you have a Hadestown or if you have a Hamilton or something like that, even the ability to get a ticket at all is sometimes very hard to obtain. And the idea of getting a great seat for face value rather than the jacked up StubHub price is like, wow, you are the most popular person in town.
Yes, Dorie and I saw Hadestown, it must have been 5 rows back, maybe 7 rows back, on the aisle 2 nights before the Tony Awards. And it was already a hot show, and you couldn't even get a ticket. So it was very, like that kind of thing is really fun.
Yeah.
And let me just add one more thing. It makes you the most interesting person in the room. Like when I say that I'm an investor in Broadway, people are so interested in that. They want to hear all about it, hear about the experiences. And it just ties together a lot of things in your life that's actually super fun. I will also say that, I work with startups, I invest in startups, and I write for Forbes. And so with all that, I went to see Ken Davenport, who is one of these lead producers who won Tonys for example, Once Upon an Island, other Godspell he was involved with. And, we became kind of friendly as a result of interviewing him for Forbes, as a result of kind of my special access, because I'm in the biz, so to speak.
That's right. And Ken Davenport actually wrote a book about Broadway investing, which is pretty helpful.
Right. Broadway Investing 101.
Yep. So Alisa, why don't we talk about our investing decisions? Like how have we determined how to invest in, which shows to invest in, and how might other people extrapolate out from those principles as well?
Yeah, totally. It's, just to say we're still finding our own magic formula here. However, what I appreciate about Dorie and my relationship is that we came together and realized we're going to have some decision-making criteria. So what should those be? Well, we certainly wanted to like the work, right? We had to sort of appreciate it or think it could be good, and also be proud of it, that we would say we're an investor in this show, and that would be a source of pride, not just that it's commercial. However, not just pride, we also want it to be commercial. We're here to invest. We do want the things that we invest in to make money. That is our goal and intention. And so we think a lot about the artistic merit of it combined with the commercial, what we perceive to be the commercial aspect of it as well. Is there more you want to add on that?
Yeah, I think that's great. I mean, obviously it is, it's not a foolproof business. I mean, I think most people would think, I mean, not everybody clearly, because they were able to raise the money and capitalize. But I mean, for us, for instance, we looked at Hadestown, which has been remarkably successful. And when I was, sort of being pitched Hadestown, I thought, this is sort of an abstruse concept, and I'm not sure that it would actually really be appealing. This seems a little highbrow for most people. I just don't know if it's going to resonate. And it turns out, no, it's a huge hit.
Yeah. And I would say similarly, when we were presented with Be More Chill, first of all, I fell in love with that great music. And second of all, it had an army of young adults, and young adults, I mean, really begging their parents to bring them to New York to see
I'm not sure young adult is the right term.
Oh, Lord, teenagers?
Kids.
Kids, teenagers. there were also people in their sort of in their late teens and early 20s who really zapped onto this musical. In fact, specifically, that when they extended the show off Broadway for one more week, the tickets sold out in 8 hours. And I thought, surely this is commercial, surely, right? Now we did not end up investing, and good thing, because sadly, Be More Chill, which I still have a soft spot for, didn't do a great job for its investors, and ultimately did close earlier than expected. So you have to there's no guarantees here. You have to do the best you can to think about, does this feel commercial? Going back to budgets, is it reasonably priced as a work to mount? And do you think they're going to be able to fulfill like sort of the ticket price? Are they going to be able to get, like, for example, 75% full or 85% full of that theater over a period of time in order to recoup, and then also in order to make money? You've got to sort of do that math part of it, as well as kind of assess it on how you think it is and how you think it might turn out to be.
Yeah, thank you. And I'll also, Tim had a question, which I'll just address here. He said, when considering investing, are there specific individuals you're looking to support? And I think that's an interesting question. Everybody, and we would encourage anyone here who's thinking about investing in Broadway, it is really useful and important to think about your own personal investing criteria. We certainly know people. I mean, we both have a colleague who runs a production company specifically focused on getting work either by or about people of color to Broadway. We have another friend who is starting a fund to invest in women-helmed shows on Broadway. So sometimes people look at it with a a sort of social agenda or a representational agenda. Sometimes it might be a genre thing. I only want to invest in musicals, or no, I only want to invest in plays. So you can really craft it the way you want. And to Tim's point, again, you have to have a fairly finely honed level of sophistication about Broadway, just in terms of like having seen a lot of stuff. But if you do, then you might say, you know what? I love Rachel Chavkin. She's the director of Hadestown. She was the director of Pierre and the Great Comet. You might say, I believe in Rachel Chavkin. Any Rachel Chavkin project, I'm in. And so if that's the case, you would look at Lempicka, which is a new show that she is creating right now, and you might say, you know what, I don't even need to look at other things. If she's in, I'm in. That's another way that one might think about it.
Yeah, we also know somebody who after In the Heights really met that team and met Lin-Manuel Miranda and said, whatever next you're writing, here's a check. Let me just give it to you. That's the notion of kind of believing. Oh, good. Lempicka is incredible. Yay, Winter Miller. I think Greta also asked a good question about the physical location in New York. We sort of skipped over that. Yes, we are in New York. And we also know plenty of folks who are in DC or the Bay Area who are also investing. How do you break into investing when you're not living in New York? Great point in question. Really, it's about how do you network virtually and remotely with people you already know to kind of figure out who am I going to meet with when I come to New York. I would really suggest that if you're really serious about investing in Broadway, one way or the other, you have to figure out, how do I set up some meetings with people when I come to New York and kind of batch them up? How do I do kind of the online or remote networking by reaching out to people by email, doing Skype calls, to learn about the process, just like we learned about the process in person? And then how do I also figure out where the regional places that I can invest my money? There are great, actually earlier, Lynn asked about ART in Boston, a very well-respected theater. Also, what's called La Jolla Playhouse. Also,
in San Diego, the Old Globe in San Diego, Fifth Avenue in Seattle. There's a lot of sort of developmental regional theaters where it's known to be incubators for Broadway shows.
Exactly. And actually connecting up with them and being involved with them and figuring out what's coming there. Those are great ways actually to look at a play. For example, Diana, which is coming to Broadway, we were able to see a video version of it. But if you lived in San Diego or could travel to San Diego easily, you could have seen it live being developed, and you could have definitely had the opportunity to invest in that by virtue of it being in your location, being developed there. So having the relationships with the regional theaters and being on the lookout for what's coming, as well as strategically targeting when you need to spend time in New York, and then batching up people and sort of activities while you're there.
Yeah, thank you, Alisa. And I think this is a good time to chime in. There, in the Q&A box, there's a question from Jeff that I think is useful. And so I will answer that momentarily, and I'll just invite anyone else, whoever else might have a question, please feel free to type it into the chat box. We want to open it up for questions now. We have a bit more to talk about and present, but we really want to make sure we're answering your questions about this. So feel free to type in any questions that you have into the chat box. And so Jeff's question, he wants to know, at what stage in a show's development are producers open to bringing in investors, which is a great question. And the short answer is, there's sort of variations on all of this. Again, let's go back to the angel investing and venture capital analogy. There are if you get in very early, the sort of angel investor, that's known as early money, and if you decide that you want to support a show at that point where sometimes it's literally just being conceptualized. Like, we were presented with an opportunity which we did not actually take a few months ago, to come in as early money for a show that is aspiring to be on Broadway. The lead producer had identified some high profile other producers to be involved, but literally there was no cast, there was no director. Like, they had kind of no idea besides a concept, but there were very favorable terms that if you came in at the co-producer level, you would be able to get so-called points, which this is a sort of Broadway 201 discussion, but the idea is, when you are a co-producer, if you come in early or you come in with enough money, they will give you a sort of favorable deal in terms of the profits that you get once the show recoups. So sometimes people will try to raise money literally just like, I have an idea, let's get it going. You can imagine that's very high risk. Most commonly, when you will see, as an investor, be presented with opportunities, is either when a show is sort of gearing up to come to Broadway, or just prior to a show opening in a regional playhouse with the intention of going to Broadway. So, for instance, we invested in Tootsie a few months before it opened in Chicago, and they knew when they were opening in Chicago that they were going to then go on to Broadway. So that was all locked in at that point, but we invested pre-Chicago. And so actually a fun thing was we got to go to opening night in Chicago and then also opening night in Broadway. Alisa, do you want to add to that?
Well, a fun thing about that was that we met David Yazbek, the lyricist of the show, and then we met him again in New York at the opening night. Actually, Dorie, you weren't there at the beginning hand, but anyway, the point is that David Yazbek remembered me from meeting me in Chicago, so it was very exciting. But I want to also address Dan's question about what do you get in exchange for your investment. Basically, you get a share of a show, and the share has just its own, criteria that you get back. The co-producers or the bundlers have all these different shareholders. You get paid back in proportion to your share, and it's pretty straightforward and direct proportion, unless, to Dorie's point, there's this notion of early money like 3-for-1 and these different kinds of levels of points. When you are a producer, again, to Dorie's point, you get extra points as far as being a co-producer for that. But ultimately, you also get, once you are able to participate in the travel show and all those other kinds of things, you get royalties over time. Again, that's going to be something that we're going to experience probably further down the road as well.
Yeah, and so just to clarify, I wasn't sure if Dan's question was about producing or about investing. And again, just to clarify, co-producers typically bundle investments together. So an investor is anybody who is contributing, buying a unit of $25,000 or multiple $25,000 units. So for somebody who's coming in as an investor, what do you get in exchange for your investment? Basically, the first milestone is recoupment, which is when the show has made back its money. It's now in the black. And then once it starts turning a profit, again, as Alisa said, in proportion to your, like how your 200, your 25,000 or 50 or whatever you put in, the proportion of that based on the overall capitalization of the show, you would be getting revenues back, sort of percentage of that. And, again, this is slightly more complex and sophisticated, but once you turn a profit, so in the early days, it's all about just like, okay, let's recoup, let's, make back the money. But when you get into the black, what happens is that the money essentially goes into two pools. 50% of the profits go to investors, toward money for investors. 50% of the money goes to the lead producer. Now, because that person, of course, really took the risk in mobilizing and getting this thing going. However, the lead producer often has given away points to co-producers in order to induce them to raise money, especially early on. So that's sort of how that works in terms of the post recoupment schedule.
Yeah.
So hope that helps. So we have some more questions which are coming in, which are great. Before we do that, I just want to mention the last piece, which is literally how does it work? Like, what is the procedure for investing in a show? How do you do it? So if you have now been presented with an opportunity, you say, yes, this looks great, I want to do it. What does it look like? So basically what happens in a very technical sense is that you very quickly, this is sort of like a hurry up kind of thing.
It's always a symbol. Yeah.
Yes, you need to get the money to your co-producer. And so typically that is either, if you're in New York, you can hand deliver a check. Otherwise, they're probably going to want a wire transfer, and you wire in money to the appropriate fund, because typically each show will create its own like show entity, its show LLC.
Typically.
And so they will get you the money, or sorry, the information so that you can wire it into the right place. And there will be paperwork for you to sign and do that. And it's extensive. It's very extensive paperwork. It is not a bad idea to hire a lawyer to look at it, or if you're an investor, if you have a reasonable familiarity, with sort of understanding legal terms, you can go through it. But just be aware, it is a lot to go through. It's like often 100-page document about this and the this and the this. But yeah, so you want to read that over to make sure you sort of understand what the deal is. And so you sign that document, you send in the money, and then you are good to go. Of course, this almost goes without saying, but I will make sure to say it. You want to make sure that the person with whom you are investing really is a legit person. When they say, "Oh yeah, I'm involved in this show, I'm a Broadway person," you want to do your due diligence, make sure they really are a Broadway person, they really are on that show. And some Google searches can help solve this. But if there's any doubt whatsoever, do your homework, obviously, with anybody that you are investing with. You want to make sure that they are representing themselves and their affiliations appropriately.
Yeah. Dorie, just one more thing to add to that. Also, the point about the scramble is real. Like, for whatever reason, it's like, oh, we got to hurry up. Even if you don't have to hurry up, what I would just suggest is think about the business entity that you want to invest from. So Dorie and I formed an LLC. We are not giving you that advice. Talk to your accountants and your lawyers. Dorie and I together formed an LLC. It's called Westville Capital. And we both funded that sort of bank account with money. So it sounds sort of obvious, but you really have to have the mechanics ready to go, because you're always out of the country when this all happens. Like, just being honest, like, you're always out of the country or out of town. So kind of setting up the mechanics and thinking through with your accountant and lawyer, what is the vehicle through which I want to invest, is also a very helpful step.
Yeah, that's useful. So it looks like Tim has a question. Tim wanted to know what level of return on investment, out of the, say 1 in 4 that makes a profit. Like, what does that look like? Or what have you been able to get for return in your experiences so far? So you can imagine it's a pretty wide variation, and it is, this is where Broadway is pretty opaque. So a few interesting points of reference here. So number one, of course, these are not publicly traded entities. So there's not one place where you can get all of the information. It's not transparently presented. And so in fact, the sort of 1 in 4 stat, it's reasonably accurate. But the way that it had to be constructed is that the shows that do recoup, the shows that are profitable, they always announce it, right? Because like, why wouldn't you? Why wouldn't you announce your good news? So essentially, what scholars of the business of theater have had to do is just go back, search through all of the shows that announce their recoupment, and then by process of elimination say, okay, well, the others didn't, because they would have told you if they had. And so anyway, unless you are directly an investor in that show, it is extremely difficult to get precise information. Now, what we do know is something like, Hamilton, it has made over $1 billion.
Yeah.
So it's stunningly profitable over time. But what we, so in terms of like if we were to say an average return, like of the shows that are profitable, it's this percent or this percent, we would literally be making it up, and anyone who told you that they knew would be making it up, because the numbers are closely guarded. Some shows we know are wildly successful. Others, it's harder to tell. What we can say from our experience, our very first show that we invested in was a limited run play, and it did great. It made a 30% profit in 4 months. Yay,
Yeah.
amazing. Our second show we invested in lost almost all its money. And yeah, it may make more money on subsequent tours. That is a TBD, and something that I think is certainly possible. But it is somewhat hit or miss and hard to predict.
Yeah. And I would just say, I think it's a good experience then to try to debrief as much as possible, like what happened. Because again, going back to our original thesis, we're proud of the work, we like the work, and we think it's commercial. So like what goes wrong? Well, we've been investigating this question mark about, is the theater, does it matter which theater they're in? We think it sort of does. Like the right show has to find its right home in the right theater. What about the marketing team? We want to understand what we need to learn for the future in terms of who we want to bet on and bet with, and continue to sort of do work with. So it's been interesting. Even failures can be used as an opportunity to really learn, and that's how we're taking the really everything we're doing now.
Yeah, that's right. Jeff had another follow-up question, which is great. Do investors get a share of the profits on merchandise sales, cast albums, subsidiary rights, etc., or just on ticket sales from the original Broadway production? So the answer, Jeff, is it varies depending on the particular show and how it's constructed. Primarily, it is just the Broadway tickets, although some actually do have the merchandising rights built in. The big thing to keep in mind is that what is known in the theatrical world as being the most lucrative thing is the touring productions. And so the touring productions are separate. Those are separate entities, but the original Broadway investors get the right of first refusal in terms of your ability to buy into them. And part of the reason, at least for American tours, why they're so profitable is that, unlike on Broadway, where you're putting something up and it's just like, gosh, we hope people will buy seats, when there's a touring production, the regional places, the whatever in Syracuse, or the whatever theater in Charlotte, they actually make guarantees. And so it's not a guarantee to cover the full cost, but it is a guarantee that is enough of a guarantee that you have a pretty good sense that this sucker is going to be profitable from the get-go. So it is always very coveted to get in on a tour. And so when you are presented with that opportunity, that is often something that that people will jump on. It's different in different locales. So for instance, we have a colleague of ours who invested in a Canadian tour, and that lost a bunch of money because I don't know if it's that the material didn't resonate in Canada, or just like is there enough of a Canadian audience across all of Canada? Maybe everybody just wants to go and see it in Toronto or something. Who knows? That was not successful for him. So it's not a layup. Nothing is a layup, of course. But in the U.S., it's known as a coveted thing. But in international locations, you want to look into it a little bit more because the circumstances vary.
Right. Good.
Yeah. So let's see, if anybody else has additional questions, feel free, guys, to chime in, because we want to make sure that we're answering them. But beyond that, any other key things that you wanted to share, Alisa, about the overall Broadway investing experience and things that people might want to know?
Well, maybe I would just summarize by saying if you want to get involved in this, the first thing is just sort of to get your mind wrapped around, oh gosh, I could get involved with this. And then think about who else do you know who can begin to be part of your network to teach you the inside scoop in the business of Broadway, and who do you know who you could begin to do investments with. So it's learning and then beginning to do. That to me is the biggest takeaway in terms of how to do it.
Yeah, that's great. So MS has a question. You mentioned there's a 25K minimum. Is that most common, or do most invest more? Good question. Actually, in terms of like a sort of longitudinal look at it, I'm not entirely sure. Certainly, many people invest more. We have friends and colleagues that we know who themselves have achieved co-producer credits because they have a lot of money, and they're just like, I'll be a co-producer on my own, which means they put in 250K themselves. We know many people who have put in larger sums. But in terms of sort of statistically, I would say I'm not sure what the breakdown is, but it is not uncommon if someone has found a show that they particularly resonate with, or that they think would be especially successful, for them to put in more.
Yeah. But dipping your toe in at 25K is a good thing to do. There's no shame in that.
Yeah, absolutely. It's important in this world to learn about it and to make sure, because the thing is, what enables you to get good deal flow, what enables you to be successful in having good opportunities presented to you, is basically being a good investor. Right? It's kind of like anything. People want to do business with nice folks who are knowledgeable, educated, and so if you have what, Alisa?
Reliable.
Yes, reliable. If you, there are some people who are rookie investors, and they could be pains in the ass. They can be, oh well, I really didn't like the, blah blah in scene 2, and I think you should tell the director, blah, 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 blah. And your co-producer that you're working with is going to be like, oh my God, I am never working with them again, and you're not going to get any deal flow. So one of our hopes is that in being part of this webinar, hopefully it's oriented you enough so that you learn about it and whether it seems like it might be fun and interesting for you, but that if you do start investing in Broadway, that you were educated enough to really be able to come in and do it the right way, so that it's a great experience for you and a great experience for the people that you're working with and investing with as well.
Yeah.
So any last things before I wrap up, Alisa?
No, I think okay, I do want to say one thing about reliability. The reason I said reliable is because, in fact, we got our opportunity to invest in it wasn't the first show, it was the second show, but it went on Broadway the first, because somebody said, my investor hasn't been in touch with me for 2 weeks. They keep promising the paperwork, but they haven't sent it. They keep promising the money, they haven't sent it. So that's how we got the opportunity to get in on that, by being reliable, by following up. If this is not your full-time business, it's easy to get business and not send the money and not send the paperwork. The paperwork is extensive, reading through it, signing it. So just recognizing that, being on top of that, doing what you say you will do, always good business practice. It's actually important because your reputation is going to be important in terms of getting deal flow.
Yeah, that's a really excellent point. And so anyway, we're so happy to help share our knowledge with you guys, because over the past 2 years that we've been working on this process, we've learned a lot, and we've had to sort of fight to learn it and to make those connections. And we hope that it might make it a little bit more fun and a little bit easier for you. I will also mention to you guys, certainly like flash. This is not inviting you to invest. In no way is this inviting you to invest, but
we're not
soliciting. But if any of you guys are interested in investing in Broadway shows and would like to be just sort of kept in the loop or kept abreast of things, please get in touch with us, and we would be happy to just keep you in the loop about stuff that we hear about. And so probably the easiest way to do that, since you guys are on this webinar, is if you can send me an email through my website. You have my name written there, Dorie Clark. My website, not surprisingly, I'll type it into the chat box, but it's dorieclark.com, and there's a contact form. Just send me an email through dorieclark.com. Let me know. Just say, hey, I'd like to be kept up to date if you hear about anything interesting, and we will be in touch and just let you know what we're hearing about. But it's awesome to have the opportunity to talk with you guys. And yeah, I'm seeing people are talking about CTI, the Commercial Theater Institute, which is a great thing to sign up for. They have the 3-day workshop for people who are interested in learning about the world of producing. They also have something which is much more intensive. You probably have to be in the New York area for it because it's over a long period of time, but it's a 14-week, very intensive program, which I have not done, but I've heard is great. So Alisa, anything else on your end?
Yeah, that's it. We love you guys, and thanks for joining us today. It was a lot of fun.
All right, thanks everybody. Take care and have a great day.
Bye.